So let's look at a daily chart on this Apple. So we've got a very clear left shoulder, head, right shoulder. We were watching this yesterday for a breakdown. It actually bounced. 124.35. I like it. Keep creeping up. All right. Let's look at an hourly. In our apex, we've got a nice cup and handle. Okay, that bounce yesterday could help trap some longs for today, for a weak close today, hopefully. And I did have on my list yesterday, if you remember, I had drawn, I said, I want a weak open if this is going to get down to this handle. Well, we didn't have a weak open yesterday. So immediately when we had a decent open on this Apple, I took it off my list yesterday. But that doesn't mean I take it off my entire list, right? Keep an eye on it. And today might be the day. If the market's weak, this is the first thing I look. I'm very interested in this thing. If the market is weak, I'll be looking for this Apple. This is a major level down here. So while it is hard to break, right, you see the big bounce off of it yesterday. If it does break, there could be a very significant move in this Apple. So I'll be keeping an eye on this thing. It's below the 20-day moving average. It's below the 10-day moving average. It's below the 200-day moving average. It's below the 50-day moving average. Let's add our moving averages, right? So it's starting to ride the 10 moving average down. The 20 is right there. The 50 is right there. And it's about to drop the 200. Very clear neckline. Okay, this is a very... I mean... It's been bouncing off this level. If it can't bounce again, okay, this could, you may have a session of a significant drop in Apple, right? If you don't get a false breakdown and you get the actual breakdown, this could be this could be big. This could be a big drop. A lot of moving average resistance overhead also. So, hoping this thing gets stuffed today. We'll see. Hoping this thing gets stuffed today. We'll see. I might need to watch maybe a 3 or 4 minute chart at the open today with these big gap downs. The movement at the open might be quite rapid today. So, my intraday chart, I might tighten up the timeline on it. But this pattern has actually got even better. Right, because let's go to an hourly, right? Our cup and our single session long handle that didn't break down yesterday. Well, now we've got a nice 2 session long handle, and it's still nicely staying within this range. Right? Nicely staying within this range. So, I really like this pattern. I still really like this pattern. It's a beautiful inverse cup and handle pattern. And today could be the day with the market gapping down. Today could be the day that this neckline from this daily head and shoulders pattern breaks. So this is my number one watch off the open. It will be a pretty casual open for me because I'm really just going to be watching this. Compare this to something like Apple, which actually has, a pattern that you can very cleanly pick out, right? It's undeniable. Let's just do it from fresh because we have plenty of time because the list is short today. Let's just create a drawing set. All right. I don't think you can. It's pretty hard to miss. It's pretty hard to miss the pattern, right? It's right there. Bounce, bounce, bounce. Oops. Neckline. Right? It's very hard to miss because it's so clean. Clean shoulder. clean head, clean shoulder, right? So for this reason, and it's Apple, right? It's highly liquid, and when people buy Apple, they buy Apple. When people panic sell Apple, they panic sell it, you know? Um, and this neckline's been in play for since March. So March, April, May. It's a 3-month long pattern, and we're sitting right at the neckline. Okay, you'd be crazy to not pay attention. You'd be crazy to not pay attention to this thing. Okay? Yeah, exactly, Russell. It's a clean neckline. To have a clean neckline like this on a Head and Shoulders on Apple, it's your job to pay attention to it. You can't not pay attention to that. This is picture perfect. Now, I'm going to use this as a point of contrast to IBM just to explain something. IBM, what did we say? We said we like to see, like, this is an inverse Head and Shoulders, right? So for the inverse Head and Shoulders, to gain confidence that it's going to break to the upside, you want to see a stronger right shoulder than left shoulder, but we don't see it, so we don't like it, right? We don't like it as much. But look at Apple. And guys, by the way, don't overcommit to this pattern. As much as I like this pattern, I love the pattern. But if I'm in love with a pattern, that means I'm right about 75% of the time, right? The cleanest, most beautiful, most perfect pattern. You'll be completely wrong about it, even around 25% of the time. That's a lot, right? So don't overcommit to this pattern. But, it's there. So anyways, see here we have this left shoulder, head. See how the right shoulder is weaker than the left shoulder? Well, that's good for a short. And then as Russell said, the ideal scenario on a Head and Shoulders pattern is that you have ascending support, because mechanically speaking, the way price action moves, that's going to cause the most drastic down move. If you have the same pattern with a flat neckline, it's still a very powerful pattern, right? Right shoulder, head, left shoulder, head, right shoulder. But when the neckline is flat on a Head and Shoulders pattern, it's a lot more likely that you get a retest of the neckline when you break out. Whereas when you have ascending support, it's less frequent that you get the underside retest, which I like, obviously, because I want to get in the breakdown trade and I don't want it to look back. So and the attack angle on the neckline is nice. It's not too steep. It's not too shallow. The market's gapping down, so we'll see what happens. Hopefully the trade doesn't go too crazy in the next 23 minutes. I'd like to see this thing spike at the open a little bit and then look for it to break down.